Hello and welcome. You're watching Buy Now Sell Now on ET Now. I'm Shrishti Sharma and with me is Vinny Motiwala, and for the next 1 hour, viewers will be taking all your stock related queries onto the show, and you know the process, right? You can connect with us live on a WhatsApp number that will be flashing right on your screen, or you can also write to us on Facebook as well as on Twitter page of ET Now. Well, let's get started. Firstly, let's have a look at what the markets are up to. So Vinny, the global setup was actually muted this time around, but just ahead of this inflation print of the US, the Indian markets are seeing some bit of a profit booking.
Absolutely, not holding on, and just yesterday in the start of the afternoon we started seeing a bit of a fall because the Nifty also managed to close just almost flattish yesterday in trade, and today also after opening up a bit on the positive side, what we're seeing coming in for the Nifty is that it's given up those gains, trading with a decline of almost 0.1% in trade, like you can see coming on your screens. So yes, not managing to hold on to that positive side. Muted a commentary coming in from the US markets is keeping the Indian markets flat as well. Individual sector wise, banks you can see is among the top laggards coming in as well, and especially the Nifty PSU bank. Let's look at that one. It's down more than 2%, and that is one of the top laggards in the sector wise. Other than that, you have pharma, which is lagging in trade as well. IT, metals not holding on to any gains over there. While on the positive side, what is still trading in on the green is the Nifty FMCG space, which is managing to hold on to some bit of a green over there. Let's look at some of the individual stock movers in trade today. And in the Nifty 50, we have UPL, SBI as well as Dr. Reddy's. Ahead of its numbers, Dr. Reddy's is under pressure as well. So keeping an eye out on that one. And all these are falling in trade. While HDFC Life, IndusInd Bank, Britannia, ONGC obviously among the top gainers are coming in trade. Let's keep an eye out on that. Not an exciting day coming in on the markets, but Shrishti, something very exciting that is happening is in the paint space, and we know for the longest period of time that we've seen a lot of heating up in terms of competition coming in this paint space. Even Pidilite came out with its numbers. It was a steady quarter. They too have that paint segment of theirs as well. So interestingly heated up paint segment, and that's what we're going to discuss, I believe.
Well, yes, absolutely, Winnie. That's exactly what we are going to discuss onto the Buy Now Sell Now lens. The topic is the paint stocks, why these counters are in focus, and the Morgan Stanley has actually come up with a note on the paint sector where they not seem to be so much bullish onto the paint space. They have highlighted some of the tailwinds and the headwinds for the sector right now, and they also say that it sees more headwinds than the tailwinds and that there are downside risks to the valuations as well. Like when he was highlighting, they have also pointed out the competition that is building up in this particular space. So let's go across to Vamakshi to find out more what actually Morgan Stanley is highlighting for all the paint stocks.
Well, yes, Morgan Stanley has come out with a report on the paint sector, and they're appearing to be not so constructive on this space. They've highlighted that the threat from competition has increased in this space, and they believe that the threat from new competitors is now higher than what it was seen in the past. Steady demand is not expected to offset this increased competition for incumbents as well. They see more headwinds than tailwinds for the paint sector, and in fact, they also see some downside risk to valuations. So given all these factors, they are remaining less constructive on paints relative to the other consumer discretionary segments. Overall, changing category dynamics, medium-term risk to growth as well as margins will likely reduce the premium commanded by the paint stocks is what Morgan Stanley believes. So largely, they're not appearing to be constructive on the paint sector.
Also, let's listen into the word coming in from Nikunj Dalmia, Managing Editor of ET Now and ET Now Swadesh on the paint sector. What does he feel in terms of the competition as well?
See, what was the Indian paint sector? The Indian paint sector had 4 large players, one sumo player and 3 other small players. The sumo name was Asian Paints, and then they had more than 65% market share. The other players had less than 5%, 7% market share each, and that really has been the trend for about 10-12 years. The sector was growing at 12-13%, 15% in a good year. These businesses were growing without raising a lot of capital, and when you have growth and when you have market dominance, you obviously enjoy a premium PE multiple. That is the story for Asian Paints. Guess what? That dominance of the sumo is now getting challenged by another sumo group called Aditya Birla. If that was not enough, Pidilite, who was in the same business in home construction, has the same network, is now entering into the paint business, which means that there is a large corporate group who's going to be challenging the incumbent, and there is a there is a home improvement company, Pidilite, who understands the supply chain, has great relationships with the dealers and with the painters. Now is going to be coming up with a paint as a category. So this category will see dramatic and disruptive changes, which means the haloed P multiples, what an Asian Paints or a Kansai Nerolac or a Berger has enjoyed, that will challenge. The sector will grow, but not everybody will grow. There could be a price war here, and there could be a challenge to the P multiple. P multiples are always supreme avan when markets are convinced that growth is going to be internal and that brand will never, will never lose its mojo. Yeah. That is changing. That will change. And a year from now, 50 times no, 31 times no, 51 times no ways.
Okay, so that's all what's happening in the paint sector and the editor's take on the same. So let's understand how do our experts see the paint stocks and the sector-wise performance going ahead as well. Onto the show, we have Shahina Mukaddam as well as Kunal Bothra joining us onto the show. Hi, a very good morning to you, Shahina, as well as Kunal. So Shahina, firstly, let me come to you and have your take on the paint stocks, because now that the competition is building up in this space and the larger pie used to be with Asian paints, and it still continues to hold a higher PE multiple. So going ahead, which amongst the new entrants as well as the existing players in the paint stocks do you believe will continue to have that leadership position, and how do you see the stocks performing going ahead?
Well, see, as of now, if you see Asian Paints and Berger together have 75% market share in the overall market. So with the new, and of course, I think this quarter should be decent for them. Asian Paints reports numbers tomorrow because they've had a couple of positive tailwinds, like for example, raw material prices, crude oil prices, which are major raw materials for them. So I think all these have have come off in the last quarter. And so I think numbers should be decent, stable margins, as well as growth in terms of demand was pretty good. So, around 15% volume growth. I think so numbers should be okay. But as even Nikunj pointed out earlier, with the new competition that is coming up, for example, you have Pidilite coming in a big way, you have Grasim. Now, both these have got good distribution segments, distribution networks. Also, they're already into the home improvement segments, likely to lose market share. At the same time, I think for Grasim and Pidilite to, take 15-20% market share is going to take a couple of years. But at the same time, I think the price competition is likely to affect overall margins for the sector, which of course includes Asian Paints, Berger Paints, which are likely to start showing some correction in margins over the medium to longer term. And also, as Nikunj pointed out, valuations are expensive as of now, have always been expensive for, these companies like Asian Paints, Berger Paints. So while, these remain very good stocks for a portfolio for the long term, and I would still be invested in them for the long term. But as of now, I think given the high valuations, I would wait and pick up these stocks on corrections over the next couple of quarters, not right now. Also, I think crude oil and how the prices will move, and also the rupee dollar, the forex, what sort of impact that will have over the next couple of months, given that the global scenario is still a bit uncertain in terms of the movement of these two. So I think one needs to be cautious while investing, taking fresh positions as of now in the paint segment.
Are something that is high. Shaina is also highlighting that as well. Kunal, keeping those valuations in mind, do you think, and would you also look at a paint sector now, or would you be avoiding and looking at some other discretionary sectors? What is your view on the paint segment? Is it still a bit of a wait and watch for you as well?
Good morning, very good morning, everyone. My belief is that, very simple, that the more crude oil prices correct, or the more is the probability that the crude oil prices gets into a further zone of correction, the higher would be a probability that these paint stocks, which have been huge underperformers in the last 6 months to 1 year, they could start to pick up pace and restart a very strong medium to long term uptrend for themselves. So I think it's a matter of probability over here, and one has to play exactly according to that, I would believe, because we've seen crude oil prices falling from $130 on the Brent crude to sub $80 per barrel. But that has not actually given any kind of a major effect or booster to the paint prices or the paint stocks so far. But my belief is that any incremental sell-off or a drop in the Brent crude prices from here on, say for the next 3 months to 6 months kind of a time frame, should have a positive effect in the paint stock. So I would believe that it's a matter of probability. Till the time crude oil prices continue to show signs of weakness, one has to start getting into those buy on dips zone for these paint stocks.
Okay, so that's the take coming in on the paint sector. But let's move on and let's focus on some of the result candidates. And Carborundum Universal is the stock we are going to talk about. We'll connect with the management as well. But just to give you a highlight, this time around the company has saw a good growth on a YY basis. But if we look at their sequential improvement in the revenue and EBITDA, that was almost 1% for the top line growth and 11% on the EBITDA number. But look at the move onto the profit figure. That has seen a jump of 31% sequentially, taking up higher to 149 crores. And this around the sequential improvement in the margins were owing to the lower cost in the rhodium and Avuco, as well as the recent acquisitions have helped and the demand remains strong. But let's understand from the management, how do they see the outlook for the business going ahead? We have Sridhar Ragaranjan, CFO at Carborundum Universal. Hi, a very good morning, Sridhar. Thank you so much for joining us today on ET Now. Firstly, we have seen a good jump onto the profit figure. Tell us how the different segments have performed this time around. Where do you see the growth was driven by? Which segment has been the best performer? And going ahead, what will drive the growth for you and what's the expectation on that line?
Good morning. I think thanks for inviting us. Carborundum grew 40% this year to 4,600 crores. 50% of the growth came from acquisition that we had recently from Germany. One is Rhodeus Abrasive, the other one is Avuco Abrasive. The rest of the 50% is an organic growth, and it's an all-around performance. I would say that ceramics had an excellent growth, over 25%. EMD, electromineral, also had an excellent growth, 25% plus. Abrasive had a 59% growth, but large portion of that came from the acquisition. If you exclude the acquisition, the domestic growth was 5%. This is one area we need to work on and improve. And your next question was, where do you expect the future growth to come from? I think we have three segments, and all the three segments are doing fine. Ceramics in particular is doing fine, and we expect the growth on ceramics to continue even next year as well. So electrominerals, the same way. I think we expect the next year to grow at about 15 to 18% top line, including the acquisition that we did this year. So that's where we are looking at.
Ragaranjan, this is Vinny joining in the conversation as well, and healthy margins is what we're seeing this time, obviously from the company, and raw material prices have corrected. That is something that is supporting the margins. But what is a sustainable level in terms of margins that we could expect from the company? Are these levels is what you're looking at, or what would be the guidance for FY24?
So I think, see, this year at console level, we did ceramics, PBIT margin is about 24%. Electrominerals is about 17%. And abrasives, 5%, largely because of the acquisition that came in. I think we expect the ceramics margin to stay and probably slightly improve. The electromineral margin is also likely to stay. Abrasive margin is likely to improve because we will be doing better, post this acquisition, so we will be doing better.
Okay, moving on, if you can just share your outlook on the international business. How do you see the exports panning out from here on?
So we have more than 50% of our turnover comes outside of India. These are revenues residing outside of India in geographies like Europe, US, Russia, and these are the geographies we do business with. I think so far so good. Our outlook looks very firm. I think there are softening of demand that we are seeing in Europe, but I think there is also a lot of opportunity because people with good cost competition will survive and will probably be better off in this situation.
I want understand in terms of the recent acquisitions that the company has made. When can we expect that break even by? What is the synergies, the benefits? When will we start seeing them by from these acquisitions? And what is the growth guidance here?
So we did two acquisitions, Rhodius Abrasives, which roughly does about 65 million euro. We expect in about 2027 they should reach about 100 to 110 million euro. This is what we are expecting. And I think they will do a PBIT margin by then about 12%. This is what our current trajectory of growth. And there are 6 synergies that we are looking at in these acquisitions. The first one is pretty much on the ground, which is basically sourcing some of the raw materials that we produce from our electromineral divisions, which is definitely is already on. A sizable portion of our their sourcing is now going from us, so that is really on. We need to now start using how can we use Rhodius brand in India, and how can we put Indian products, some of our products which are on the higher end of the spectrum, which Rhodius is not manufacturing, put through their distribution network. These are some of the work that we need to happen. We just did a year back this acquisition, so I think in the next 3 years we will start seeing these benefits to really mature, and then we'll start seeing these in our results.
Okay, thank you so much, Mr. Sridhar, for joining us today on ET Now and helping with the outlook for the growth ahead for the company. With this, we'll let you go on that. Okay, that was the management of Carborundum Universal telling us what all factors did drive the growth this time around, and going ahead has a positive outlook holding up for their international business. But for this, viewers, it's time to slip into a short break, but don't go anywhere. As we come right back, we'll be taking all your stock-related queries, so stay tuned and keep sending, or rather start sending your stock-related queries to us.
Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's get started with all your stock related queries. You can send us your queries either on the WhatsApp number that will be flashing on your screens, or even on our Twitter page. And let's start then with the first query that we have today coming in, and that is from Anand, who's holding Marico 100 shares at a price of 498 rupees. Shaina, what is the long-term prospect on this one? Should they continue to hold this counter?
Yeah, I think the numbers also pretty decent, and I believe volume growth also should pick up. So I would recommend continue to hold the stock.
The next query that we have is coming in from Hamsa, and this one is on Moltec Packaging. Kunal, is it a good time to buy this one if they have a medium term to a long term sort of a holding period? But is it the right time to pick up Moltec Packing? Kunal, I believe you're on mute.
Yeah, so maybe closer to 900 could be a better point to buy the stock. That was the breakout point for the stock price from an inverted, a sort of a complex inverted head and shoulder pattern. So I think if you can probably get it closer to the 900 mark, that could be a better point to buy the stock.
The next query, Shaina, this one is coming in from Bharatwaj from Coimbatore, and this one is on all cargo logistics. At the current market price for a long-term investment of 3 to 5 years, would you suggest buying all cargo logistics?
Well, I would prefer buying it at dips because there is some issues regarding global trade currently, especially Europe, even ongoing as of now. And the stock has rallied a lot in the last 1 year. So I would prefer buying it at dips. I would prefer buying it closer to around maybe 250 type of levels. And then you can look at a target of somewhere close to 350.
Okay, that's the view.
Right.
That's on all cargo logistics. Kunal, coming to the IT major Infosys, and Amer has 100 shares at 1,308 rupees. Do you expect it to go up further, and should he actually look at buying more of Infosys right now at the current price as well?
Well, I would not suggest to average more as of now because of the extreme amount of uncertainties which are still there with the IT sector. And I think we've seen this very strong correlation that whenever the global IT stocks, specifically the US focused names, when there's recovery over that kind of a space, that's where Indian IT stocks also tends to get into a recovery phase. More importantly, just looking at the plain charts for Infosys, the stock has been unable to close the gap which it created post results. So that 1400 remains to be a very strong resistance point. My belief is that till the time the stock is unable to cross or back above that 1400 mark, it could be a bit of a challenge to buy or average the stock. So I would suggest not to average at current levels and wait for strong confirmations of breakout as well as reversals for these IT names, specifically Infosys.
So wait out a bit for Infosys. But Shaina, what's your view on Aditya Birla AMC? Sandeep from Noida has 25 shares at around 400 rupees. How is it looking for the long term?
Well, I think Aditya Birla AMC is looking good as of now. They have actually shown a good growth in the AUMs, and the overall sector has corrected a bit. So I think it is a hold as of now from my side.
Okay, let's move on then to the next one. And this is a short-term query that Rajesh Maheshwari from Singapore has. And this one is about just, keeping it with those AMC names then, Kunal. We have seen a bit of a tepid performance, and ICICI Securities particularly, they're holding 300 shares at an average price of 530 rupees. Would it make sense to continue to hold this, or maybe look to exit in the short to medium term, Kunal?
I think you can continue to hold on. The stock has just very decently given a breakout of I would say sort of a double bottom pattern, not exactly a double bottom, but sort of a double bottom pattern for itself. The breakout point is around 470 for ICICI Securities. The depth of this pattern is approximately around 50 rupees, 60 rupees, which means we can be looking out for 520, 525 as a near-term target for the stock. So I would suggest to hold on to as of now, maybe closer to 520 mark in case if the stock gets into an overbought territory as well as reaches those targets which I just mentioned. That is a point where you may look to consider booking out profits.
Okay, moving on to the next query. The question is from Kabir Bedi and Shaheen. I'm not sure whether you tracked this one or not because he has purchased 2,500 shares of Ashapura Mindchem from a price of 128 rupees a month ago. His investment horizon is for the next 3 to 6 months. He's sitting at a profit right now. So would you be able to advise him?
Well, I think the stock is looking, good for the shorter or medium term. Of course, it's a small cap, just 1,300 crores of market cap. So to that extent, it's a trading stock, risky stock, but trading wise, it does look like it's on up move as of now. So I would hold.
Okay. Kunal, the next query is on RVNL and RITES, right? What is it that in terms of, would you say that it's the right time to buy RITES as well as RVNL?
So first of all, I think over the last 3, 4 days specifically, I've been mentioning that most of these railway stocks have entered into a very overbought territory for themselves. And what we've seen over the last 2 days or so is strong price correction coming back into these stocks. Now, ideally, because the magnitude of price uptrend. So, for example, for RBNL, the stock has jumped up some 70-75% in a matter of 1 month. Wait out for a correction of at least 20% from the swing highs for such kind of names. That could be a good starting point if you're looking to buy these stocks and then use another 10% kind of a correction to average out. So I think that should be a stance for stocks like RBNL as well as RITES. Don't buy at the peak of momentum. Wait out for at least a 20% correction from the previous swing highs, and that could be a good starting point for either of these two names.
Okay, moving on to the next query. Shahina, this query is on PFC as well as RAC. The question is from Vipun Guar from New Delhi, and he's holding 3,000 shares of PFC from a price of 120 rupees. So just wanted to know at this point in time, should he book profits since he's sitting at a profit right now? And how do you see this counter as a good dividend play? And also he's holding 600 shares of RAC from a price of 94 rupees. So what's the outlook on this one?
Yeah, I think both these stocks are a hold as of now. They are always been high dividend paying stocks, and with the government now mandating, most of its holdings to give good dividends, I would continue holding it for a dividend play.
Okay. Kunal, the next query that we have, and this one is from K. Parthasarthi, senior citizen from Chennai, and wants a technical view on Nalco that bought it at 92 rupees, 200 shares. What should they be doing? Obviously, they're making a loss currently. Will it come back to the target, the buy price in the next 6 months, or what would you suggest here?
See, I would suggest to hold on to the stock as of now. Now, I understand that Nalco has been a big underperformer. The stock corrected from 130 levels in 2022 start to, I think, at one point of 69, 67 rupees. Now, the reason why I'm sensing a hold is because the stock is very close towards its neckline resistance. So 88, and if you try and draw a support trend line close to that 88 mark, has been a huge pivot zone for Nalco. Earlier in 2021, 2022, the stock took support at this level. And now in this rally, the stock is taking a lot of resistance. But the attempts towards the 88 mark is increasing, which means sooner or later, the stock could see a breakout of this 88 mark. I would suggest to hold on to the stock. Possibly in the next maybe 1 to 3 months, we can expect a breakout about this 88 mark for Nalco, and then a resumption of a possible new uptrend for the stock.
Okay, so that's a hold coming in on Nalco. And Shahina, coming to you for the next query that is on PVR. Rajan from Delhi is holding 45 shares of PVR from a price of 1800 rupees for the last 1 year. What is the outlook on this one? Any hopes on recovery given that we have seen the sector consolidating with the big players? So are you hopeful of a recovery on a stock like PVR?
No, I would recommend exit. I believe, while fundamentals may start looking a bit better, I think valuations are extremely expensive. So I would exit the stock.
Okay, Kunal, the next query, and this one is from Parvinder Singh from Noida, and this is on Praj Industries as well as BHEL. The Praj Industries at 50 stocks at 335 rupees, and BHEL 150 stocks at 75 rupees. Should they continue to hold this for a period of 6 months?
Absolutely. I am of the belief that both Praj as well as BHEL are good buys from a medium to long term play. Praj Industries has gone through a correction and is now into a time wise consolidation. BHEL has consistently shown signs of strength. Multiple times the stock has given short term breakouts. Yes, the stock doesn't sustain above after a swift kind of an upward trend like what we saw last week or so for BHEL. But then I think it's a matter of time that the stock moves into the three-digit club pretty soon. So I would be bullish on BHEL as well as Praj. Would recommend a hold.
Coming in on Praj Industries, but moving on to an important flash that is flashing on the bottom of your screen, wherein the NCLT has allowed Go Air plea seeking insolvency resolution. That the insolvency proceedings for the Go First has now been given a green signal by the NCLT, and the proceedings will take ahead. That's the update we are getting from the agencies, because do remember all these proceedings for Go First was ongoing with a lot of creditors at play. We have been understanding from our sources that the creditors are meeting the airline officials to understand what all is the issue. Are there any hopes on the recovery as well? Wherein over 6,000 crores of rupees is what the lenders are looking forward to recover from the Go First. And LCNT has admitted the Go First insolvency petition. So let's understand how is the issue being seen by the experts. And we have HP Ranina, who's the lawyer at the Supreme Court. Hi, very good morning, Mr. Ranina. Tell us your first outlook on this particular news flow where the NCLT has finally allowed the plea seeking the insolvency resolution. What does this mean for Go First, and how can we see the actions going ahead?
Well, it's a very good news for Go First, because now at least the creditors will not be able to seize the assets or impound the assets. And therefore, I think the Go First will be able to survive. If in the meanwhile, they come up with some funds and they can somehow resolve the matter with the lessors, then it will give them the breathing time and they can come out of this crisis. But at least at this point of time, they are safe. Nobody can touch them. No creditor can touch them, especially the operating creditors. And therefore, I think this resolution process will now begin. They will have to now appoint a resolution professionals. The creditors will appoint IRPs, that is called resolution professionals, who will then come to agreement with the lenders, try to sort out the matter. Maybe the lenders will have to take a haircut and reduce the loans which they have extended, or the unsecured amounts which is lying against a go first, and then come to some situation. So it is possible. The whole advantage of the process is that it gives some time for the company to come out of the mess if it can, and the company can be saved so that the employees' jobs are not lost. Hello.
Okay. So what we are understanding after NCLT order, so this is a big relief for Go First in the sense that this is what they were looking for, the airline was looking for, that moratorium process will be initiated and the appointment of an IRP, the interim resolution professional. And in the same direction, the NCLT order has been passed on. A Vilash Rai to be appointed as IRP. Now, the key highlights of the order that has been passed by NCLT, it mentions that the board will be dissolved. The airline board will be dissolved, and secondly, there will be no layoff, no hiring or no layoff will be done from after the passing of this judgment. In addition to this, the management has been diverted to deposit 5 crores with IRP to meet the expenses. So 5 crore has been it has to be submitted to IRP so that the expenses will be met and then the process will be initiated. Now this is what GoFirst was looking for, because they were citing that the help the airline to maintain the status quo of their aircraft. It is put on a hold. In addition to this, the NCLT order has called by NCLT, and he will take over the day-to-day function. He will take
on Go First assets as well. Majid Memon is obviously, what does this one will mean for Go First, Go Air in that, and how much time in your experience does this whole process take of getting done? What is the normal time period that we see?
No, I think at the earliest, because you see, this insolvency approximation is one thing. The staff
1,000 crores that is being still pending for all these banking.
and then operate in somehow kinds of constraints. It's not very easy for those who, it's not that easy for them to comply. But let us hope for the best.
Absolutely, hoping that they do come back to that. But
be an exercise which might take quite some time, and it is which they will be facing. And I think what he says is right.
What's your understanding on this issue?
Well, I think the employees will definitely suffer because obviously there are no funds available. So there are two options. Employees will have to take that happened some years ago with Air India, or they will have to find another job. I think most of them will be trying their best to get jobs with Air India, the new Air India, the Tata management. So they will definitely want to move out and not take a risk any further. But until they stay back, I think they'll have to take a cut in salaries, because I don't think GoFirst will have the ability to pay the salaries as in the past. So this is what we call a catch-22 situation for the poor employees.
Catch-22 situation coming in for the employees, so a bit of a relief coming in this afternoon. And obviously, as of now, go keep an eye out on that. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more details after this break.